December 2025 is now one of the most consequential payment months ever issued by the Social Security Administration. And the stark reality is this: millions of Americans will see more than one federal benefit deposit in the same calendar month, a structural quirk with real consequences for household budgets, financial planning, and systemic understanding of Social Security, SSI, and disability income programs. The Social Security Administration, SSA, mandated by statute to distribute retirement, survivor, and disability benefits on a staggered schedule tied to birth dates, will this month follow its standard payout calendar while simultaneously advancing the January 2026 SSI benefit into December 2025 due to the New Year's Day holiday falling on January 1st, 2026, a federal holiday preventing normal processing. What this means in practical terms is that Supplemental Security Income, SSI recipients, will receive two checks in December 2025, one on December 1st for the regular December 2025 payment, and a second on December 31st, representing the early January 2026 benefit, now pushed forward because the first day of the month lands on a holiday that halts SSA operations and federal banking functions. At the same time, traditional Social Security retirement and Social Security disability insurance, SSDI recipients, will continue to receive benefits on Wednesdays according to the SSA's long-established schedule, December 3 for pre-May 1997 beneficiaries, December 10th for birthdays 1 to 10, December 17th for birthdays 11 to 20, and December 24th for birthdays 21 to 31. The result is a rare confluence of multiple deposits, sometimes three distinct federal benefit payments in December for a single beneficiary, a calendar anomaly with deep functional and financial consequences. Before we proceed deeper into this analysis, make sure you like this video, subscribe to the channel, and turn on notifications right now so that you never miss critical updates on Social Security payment schedules, cost of living adjustments, COLA, and the exact implications for benefit timing, budgeting, and policy shifts affecting millions of Americans every year. At the core of this situation is the intersection between SSA's payment timing rules, the federal holiday calendar, and annual cost of living adjustments. SSI, a needs-based program distinct from traditional Social Security retirement and disability benefits, follows its own cadence. Payments are issued on the first business day of each month, except when that day falls on a weekend or holiday, in which case SSA issues the payment on the preceding business day. Because January 1st, 2026 is New Year's Day, a federal holiday, the SSI payment for January is moved to the previous business day, December 31st, 2025. That same SSI payment would normally be posted on January 1st, but federal holidays effectively freeze SSA processing and financial institution posting. Consequently, December 2025 sees two SSI funds credited, one for December and one effectively for January, a technical move designed to maintain the statutory sequence of payments, but one that leads to the surface impression of extra money entering accounts. This is not because SSI is doubling benefits, but because payment mechanics dictated by law require that January's payment be issued before the holiday disrupts normal calendar flows. When recipients check their bank statements, they will see December 1st and December 31st credits, unless they are in unique categories such as those grandfathered into older SSA rules. The implications of this scheduling are enormous on both personal and macro levels. Households that rely on SSI as their principal income source, often elderly or disabled individuals with limited alternative earnings, face the psychological and budgeting challenge of interpreting two deposits in a single month. Without context, it can appear as though an additional benefit has been granted, when the reality is that the December 31st deposit legally counts as the January 2026 benefit, meaning there will be no further SSI payment in January 2026. Effectively, this is a timing compression, not a bonus, and if recipients treat the double deposit as extra disposable income, they may create a gap in coverage for the early weeks of 2026. Thus, individuals must understand that the cash credited on December 31st belongs to the January entitlement period, and their spending must reflect this assignment rather than a December bonus. Financial counselors urge recipients to adopt strict envelope budgeting once the funds are received, and consider the early payment a forward-looking resource, not a discretionary windfall. Failure to internalize this difference could lead to emergency borrowing, depleted food and medical budgets, or rent and utility shortfalls later in January. Meanwhile, traditional Social Security retirement and SSDI benefit schedules continue to adhere to the SSA's staggered Wednesday schedule, based on birth dates for beneficiaries who began receiving benefits after May 1997. A system designed to smooth cash flow to banks, credit unions, and the broader Federal Reserve distribution infrastructure. Under this model, beneficiaries born between the 1st and 10th of any month receive payments on the second Wednesday for December 2025, December 10th. Those born between the 11th and 20th receive them on the third Wednesday, December 17th, and those born between the 21st and 31st receive theirs on the fourth Wednesday, December 24th. Beneficiaries who began receiving Social Security before May 1997, and those who receive both SSI and Social Security benefits, are paid on fixed schedules that do not vary with birth date and are often dispersed earlier in the month. This complex mosaic ensures millions of payments are distributed in a predictable fashion throughout the month, while honoring decades-old statutory rules for legacy recipients. The interplay between these schedules and the SSI holiday shift produces multiple deposit events for some households, a technical side effect of the calendared system, rather than a policy change in benefit structures. Overlaying this timing structure is the 2026 Cost of Living Adjustment, COLA, a legally mandated inflation response mechanism designed to maintain the purchasing power of Social Security and SSI benefits against changes in the Consumer Price Index for urban wage earners and clerical workers, CPIW. For 2026, the SSA has confirmed a 2.8% COLA increase for Social Security and SSI beneficiaries, a modest rise compared to historic inflation spikes but meaningful for recipients whose incomes are fixed and whose expenditures on essentials such as housing, healthcare, and food continue to climb. This increase translates into approximately $56 more per month on average for traditional Social Security beneficiaries, with similar proportional adjustments for SSI payments. Because the SSI payment for January is paid on December 31st, 2025, that check will reflect the new 2026 COLA rate, making it slightly larger than the December 1st check issued under the 2025 rate. This dual rate situation creates juxtaposed checks in the same calendar month with different benefit calculations, one at the older rate and one at the updated rate, which can further confuse recipients unless they are clearly informed about the source and timing of each deposit. Financial planning advisories stress recipients should log into their My Social Security account or contact the SSA directly to verify these COLA-adjusted amounts and understand precisely how their deposit amounts have been calculated so they can plan appropriately. The policy architecture behind the COLA is itself consequential. It is not discretionary. It is automatically determined by changes in CPIW measures in the third quarter of the year preceding the benefit year. In a period of economic uncertainty, modest COLA increases reflect both inflation control efforts and the persistent challenge of aligning governmental support with rising costs in housing and healthcare, areas where inflation often outpaces general consumer price changes. As a result, while the 2.8% adjustment provides measurable relief, it may still fall short of fully offsetting real-world cost increases faced by seniors and persons with disabilities. Even with precise technical adjustments in benefit rates, recipients must remain vigilant about rising out-of-pocket expenses, particularly for Medicare premiums, long-term care, prescription drugs, and energy costs, categories that often carry outsized weight in household budgets for older adults. On a systemic level, the appearance of doubled deposits in December underscores deeper complexities in how the United States administers its largest social insurance program. The Social Security system supports over 70 million Americans through retirement, disability, survivor, and supplemental income streams each month, and anomalies in payment timing expose the fragile perception many beneficiaries have of the system's mechanics. Without clear public information, technical calendar adjustments can be misinterpreted as benefit expansions or contractions rather than scheduling artifacts. Advocates argue that greater transparency from SSA through automated communications, clearer messaging in beneficiary statements, and proactive outreach could reduce confusion and help recipients align expectations with statutory payment frameworks. The SSA's ongoing shift toward digital-first services, including increased online access to payment calendars, benefit verification tools, and electronic notices, represents an operational adjustment designed to streamline interactions, reduce wait times, and increase accuracy in payments, but it also means beneficiaries must adapt to digital communication channels and avoid misinformation that can spread rapidly through social platforms. At the household level, planners emphasize wresting clarity from confusion. Beneficiaries must understand that the perceived extra payment is not extra income, but a timing shift, and ensure that their January budgeting reflects the fact that no separate payment will be issued in mid-January for SSI recipients. For those with combined SSI and Social Security benefits, the potential exists for 3 separate credits in December: SSI on December 1, Social Security on one of the Wednesday tier dates, and then SSI again on December 31st, requiring meticulous cash flow management to avoid depletion of essential funds. Professional financial counselors advise marking these deposits distinctly in household ledger systems and aligning them with monthly obligations such as rent or mortgage, utility payments, insurance premiums, food costs, and medical expenses. This is not a suggestion, it is financial triage in a month of atypical deposit patterns. Looking beyond the individual, these timing phenomena touch on broader economic and policy debates. The Social Security trust funds, demographic shifts with an aging population, and continued legislative discussions about long-term solvency all cast a shadow over the program's future. While COLA increases address inflationary pressures in the short term, they do not resolve structural funding challenges that could, over decades, require changes to tax rates, benefit formulas, or eligibility ages. The political environment in Washington continues to feature divergent views on entitlement reform, fiscal discipline, and social safety net expansion, with potential implications for how benefits are calculated, how payroll taxes are structured, and how future emergency or periodic adjustments might be handled. In this context, the December 2025 double deposit event is a microcosm of larger forces. It reflects the tension between rigid statutory procedures and real-world financial needs of beneficiaries navigating a complex system under evolving economic pressures. In conclusion, the December 2025 Social Security calendar should be understood as an operational quirk with profound implications. Millions will see multiple deposits, but these do not represent extra benefits. Rather, they reflect timing shifts due to holiday calendars and payout rules. Recipients must plan with discipline and clarity, distinguishing between deposit timing and benefit entitlement, and recognizing that the December 31st SSI payment is the January 2026 benefit. As inflation continues to press on fixed incomes and policy debates about Social Security's future intensify, every beneficiary must stay informed, budget with precision, and prepare for ongoing uncertainty. The SSA's structural rules, together with annual COLA adjustments and demographic pressures, mean that future years could bring further intricacies in payment timing, benefit levels, and economic consequences for individuals and the broader economy. The stakes are high, and the only certainty is that uncertainty itself will remain a defining feature of Social Security's trajectory.